Welcome to MasterTrader.com, where you learn simple market analysis to make money investing and trading in the markets. In this chart of the week, we're going to discuss trading climactic buy and sell setups. I'm Dan Gibby, Chief Options Strategist, and this is a great pattern because with over 1,000 liquid stocks to buy or short, we find these setups very often because they get extremely overbought or extremely oversold from greed and fear. And I'm going to cover the exact setup for the Master Trader buy and sell setups and how to enter them and manage in between. This is our definition: 5 or more lower high bars, lower high red bars. We're focusing on the oversold ones right now. More is better because we want this rubber band to get stretched of oversold. I'll show you what fluid means, but the fluid sell-offs are the best instead of gaps and overlapping bars, things of that sort. We definitely want it far from the declining 20-period moving average. These setups apply to any time frame. We want increased volume around the turning point because that helps ensure that the last of the sellers are panicking at the worst possible time. It's preferred that it's in a support area. It's going to increase the odds of the climactic buy setup succeeding. That's the setup. Now let's talk about how to enter and manage. We need a reversal bar pattern before we enter. So we're just watching it sell off, sell off, sell off, sell off, and we're waiting to strike. And I'm going to show you how to drill down, so to speak. Whatever time frame you're trading, we're going to drill down at least 2 time frames lower to give us that confidence that momentum has slowed and the buyers are taking over for a retracement. Then the stop's going to be under support, and then you trail it while you're in the trade. Target is always resistance for longs, but if there is no resistance, because if you get that nice fluid sell-off, we're looking for roughly a 50% retracement based upon retracement rules. Let's look at some examples. 1, 2, 3, 4, 5, 6 red bars, lower highs, far from the 20, and we have our support area. This is what we call a potent, meaning powerful, reversal bar. Why? It gapped down, bottoming tail, pick up in volume, and it closed deep into this ugly red bar. So the entry is over the high, stop under the low, manage in between. For the intraday traders, and I'm going to show you an example, you could drill down into the smaller time frames. So since this is a daily chart, you would drill down to the hourly and 15-minute chart to get a better entry in here. I had a little breakout failure here at the high, but it had 1, 2, 3, 4, 5, 6 red bars, lower highs, in a support area. I marked off 2 areas here for you. But remember, I'm not touching this stock until it trades above this high, or if you get a bullish reversal on the intraday charts. The target here, which is roughly a 50% bounce, you just eyeball it from top to bottom. It is in alignment with resistance. So that would be my target on this climactic buy setup. Here's one with a bottoming pattern also. So we have our 1, 2, 3, 4, 5, 6, 7, 8, 9 red bars, gaps down to support. That small little bottoming tail again engulfed this red bar. This would have been a valid trade over the high of this bar, stopped the low. So even though it churned around for 3 more days, you still didn't get stopped out. But now, with this bullish range expansion bar and a bottoming tail, nice volume all on this shakeout, and we have this price void above. So my target on this one, again, 50%. There's a little gap filled there. But because of this subsequent consolidation, this was even more powerful. So this is just another tool that you can use, overlaying it with the climactic buy setup. And here's what happened to it afterwards, which shows you that targets are just areas, but in trade management mode, we're just trailing the prior bar's low. So we would have gotten stopped out way the heck up here. Now I'm going to show you the intraday patterns that we're looking for to get a better intraday entry on these climactic buy setups. All of these are pictures of bullish reversals. And Master Trader loves selling out of the money puts and put spreads on these climactic buy setups, because when the stock is selling off aggressively like that, implied volatility rises, giving us overinflated juicy premiums, which is our maximum gain, and all we're doing is calling a short-term low, and we're profiting from the day-by-day time decay. In fact, our weekly options trader specializes in just selling options and credit spreads around bullish and bearish reversal patterns like this. Way oversold. This was choppy here, so this is actually a excellent point of information here. See here, 1, 2, 3, 4, 5, 6, 7 red bars. Those 7 red bars are not a Master Trader climactic buy setup. Why? Because they're gapping up, down. I don't have lower highs. They aren't fluid. It's not far from the 20. That's actually a bearish breakdown. On this sell-off day here on the volume, we in the Master Trader Green Room, which is our active trading room throughout the day, on this ugly day, we've been watching this ever since for an entry for the climactic buy setup. So this just set up. Now I'm drilling down one time frame, the hourly chart. It's still in a downtrend, but it had a deep retracement and then showing signs of a higher low. So look at all these days, the selling is finally slowing down. Now we drill in one time frame lower than the hourly. It went up in the morning, came down, tried to hold, but didn't, came down again. This is what we call a bullish 2-bar reversal, and that set up our higher low on this chart. So now I have a higher high, higher low. Over the high of this green bar is my entry for a climactic buy setup. And we could have even sold out of the money puts here, but it had earnings, so we didn't want to do it. Once you're in the trade, then you're just managing in between. With the close of this bar, we're now moving our stop under this pivot low right here. So we do trades like this every single day, all types of patterns. I'm obviously just addressing one pattern, but check out the Master Trader Green Room if you'd like to take advantage of trades like this. These are 3 more trades that we've been watching for a few days now in the Master Trader Green Room. Let's just discuss the quality of all of these. SKX, gap down on earnings. Another example of it not being a climactic buy setup at all. 1, 2, 3, 4, 5, 7, 8 red bars, but it's not fluid. It's a catastrophic gap. It's basing here at the lower end of this wide range bar. Will it be a bullish candidate someday? Sure, but it's definitely not now. The sellers are still in control. Man, 1, 2, 3, only 4 red bars, lower highs. So it's not a Master Trader climactic buy setup, but we have our volume, we have a bottoming tail green bar. So we're still watching for an intraday bullish setup using those patterns we've just reviewed because of this price void above. Philip Morris, another bearish gap on earnings. And in the Master Trader Green Room, we're always looking at gapping earnings, news stock, pre-market every day. And we noticed this one. And we were looking to go long, but following these rules that we're reviewing here today, we never got the setup until this green bar. And then we went to our intraday bullish setup, and that was your entry. Let's look at a climactic sell setup now. Now, this we didn't have our reversal bar, but this is what we call a Master Trader gap and crap pattern. We're still looking for short-term buying exhaustion now. It's like, and I tell students, it's kind of like a rocket ship. When I see things going up like this, I tell myself when the rocket fuel burns up, that's the same as the buying demand, buying pressure drying up, and it will come down. It will retrace. Unless it gets bought out, these patterns are very high probability of a retracement. This one far from the rising 20 period moving average. We got our stretched rubber band again. Look how far it is. And you can all, here's the green is the 50 MA. We also like to see stock far from the 20 and the 20 far from the 50. This is even more ideal. 5 or more higher low bars, we have that. We have 1, 2, 3, 4, 5, 6, 7, 8, 9. Increased volume. It's a gap and crap, which is a flavor of the climactic sell setup. So instead of having the reversal bar right there, the gap and weakness of this reversal bar is what creates the gap and crap pattern. And we just look for a bearish intraday reversal to short bearish stock and option strategies around. If you would like to build your investing and trading knowledge and confidence to profit in all markets, the Master Trader Weekly Lessons for investors and traders is an incredibly great way to jumpstart your education for under $12 a month. Each lesson will provide valuable education on stocks and options, basic to advanced chart analysis, investor psychology and risk management, and much more. Each one of these can change your financial future, so I highly recommend you sign up for these lessons. Go to mastertrader.com/lessons. Hope that helped. Don't forget to subscribe to the Master Trader YouTube channel if you'd like to continue to learn valuable lessons on investing and trading in the markets. Good trading, and see you next time.